Hey, Mark Robinson here again, and welcome to another episode of Wealth Rewired. And this is where I want you to start thinking differently, right? So, to be fair, guys, we haven't really come up with a real cool tagline yet, but we are working on it. Wealth Rewired, think differently. But I got a weird feeling someone else has already got that one, or that tagline anyway. So, anyway, I'm your host, Mark Robinson. I'm here by myself again. As you will know, that some of our podcast guys, we're going to have my beautiful wife as co-host as well. She's going to be doing some by herself, and then I'll do some by myself as well, just to help you get different perspectives and start thinking about how you've been wired, right, and how we can do things differently. Yeah, and that's really keen. So I put these two together. This is like the part two. All right, so ways to invest. If you haven't heard, I didn't watch the. If you're not watching them in any sort of order, guys, then just make sure you go to Wealth Rewired Part One and then Part Two. The first one was sort of like the old way, right? We were told of how to invest the old way, like buy and hold, negative gearing, blue chip, managed funds in traditional businesses, right? Where you had to go to a restaurant or go to an office or surgery or wherever it is, a place, right? So you had to get there. And I spoke about how as a financial planner, I had to do the old way, right? And it was like the pie method, I called it. And then I spoke about all these different ways that you can invest, right? And from 2025 onwards, there's just so many different ways you can make money now that it's crazy. And so by doing that, how do you know with all these new ways, how do you um, do this, right? How do you turn around and go, alrighty, I know there was an old way and I know there's a new way. What does it do? Like, how do I build my portfolio that suits me and nobody else, or somebody's trying to sell you something? Yeah. Now, I've got some really cool friends who are experts in property, experts in shares, crypto, gold, silver, and I know that, that's what they know. So they actually present their strategy. What I want you to do is to start to work out how you can build a portfolio, right, based on what you're trying to achieve. Okay. We built this model called the wealth pyramid model. And what we like about it is it's shaped like a pyramid. Yeah, and you ultimately want to have solid long-term foundations at the end, and as you go up you put sort of less and less capital in. Yeah, it's shaped like that for a reason, right? You don't have to put a lot of money at the top of the pyramid to make a lot of money. Okay, what we've done is there are six parts to this, right? There is the first part, which is what we call foundational assets. And in the foundational assets, your targeted return is a sort of between 5 and 13%. And your intention when you go in is to hold these assets forever. Now, you may sell them at some point, if they stop working for you. See, a lot of people do these buy and holds, but if property is an example, if it stops working, right, if it's no longer that workhorse that you needed it to be, then potentially getting rid of it could be the best thing for you, right? However, when you go into it, the intention is to buy forever. The types of assets that go into foundational are things like buy and hold property, blue chip shares, gold, silver, diamonds, right? Now, if you're going to put any type of cryptocurrency in there, what I suggest you do, the Bitcoin is the only one, I believe, my opinion, that fits there. However, you have to have it on a cold wallet, right? And you have to have your seed phrases fully secured. And if you have no idea what I was just saying about Bitcoin, then guys, then maybe, right? Maybe that Bitcoin is not in your foundational assets yet. Okay. And that's okay, right? If a lot of the things that we talk about when we talk about investing and stuff on the Wealth Rewired podcast, if none of it makes sense, that's cool, guys. We all start somewhere, right? Some of the things I might say might sound a bit Martian, and that's fine. Yeah. Then the next asset class on the wealth pyramid is what we call wholesale assets. Yeah. Now, our definition of a wholesale asset is buying a quality asset at a discounted price. A quality asset at a discounted price. Or you might have heard, another way of saying it, of buying below fair market value. Yeah. Or if you're buying shares or currencies or crypto, you might have heard another term called buying the dip. right? Now you got to be careful with buying the dip, guys, because it might go dip, 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 dop. Right? And so you might end up getting stuck with a lot of cryptocurrency that it may never come back, right? So you've got to be really careful if you're buying the dip, know what you're doing. Now, your targeted returns is between sort of 12 and 50% return, and you're looking to hold these things anywhere from sort of, 1 to 2 months to up to 3 years, right? And the types of strategies that fit in wholesale assets are things like, renovations, you could, adding value basically, or forcing equity, or rehab might be another way that you've heard it being called before. Commercial properties to some degree, but again, depending on what you're buying, long-term strategies, commercial could be in the foundational asset side of things. You might do some subdivisions, right, or splitter blocks or duplexes, or again, buying, some assets that are below fair market value, and you're looking to sell them in a certain amount of time, right? It's all about that time frame, right? You got your targeted returns and staggered strategies, yeah. The next one is what we call focused asset sector. And this is where you literally get laser focused and you start focusing on different industries. And your targeted return is between 20% and 200% per annum. And you're looking to hold these assets somewhere between 2 to 10 years, right? And again, this is the industry. So you might start focusing on tech, retirement, or aged care, medical. You could be doing, high-tech medical. You could be doing medical marijuana. And AI, right? AI right now is a massive industry that's going, billions and billions, if not trillions of dollars are going to be made over the next few years. So you want to make sure that, those sort of things. Now, we believe, right, the best way to get into these sort of focused asset sectors is using a vehicle, what is called an exchange traded fund, right? An ETF. Now, an ETF, right, the best website, again, just my opinion, mate, you can check it out yourself, is one called ETFDB, right? Exchange Traded Fund Database.com, ETFDB.com, right? Incredible information in there, and you can get very focused on the types of industries that you want to go into, very focused on what you need, and you can either go into, they even tell you where you can buy them, and you can set up a broker yourself. You could even go one step further. If you didn't want to buy, those ETFs, you can actually see exactly how weighted they are in the different companies that they've invested in, and then just go and buy those companies direct using your platform, wherever you buy your shares from. Yeah. Yeah, the next one is what we call active trading. Now, with active trading, you're looking to sort of get a return between 50 and 1,000% return per annum, right? And you're going to be holding these trades, sometimes milliseconds these days, guys, okay? But say somewhere from, say, 4 seconds to 9 months, right? Now, I genuinely believe if a trader is holding a trade for longer than 9 months, their ego is definitely getting in the way. Yeah, I remember years ago, we had this guy, and he'd never close a losing trade. It was insane, like he was on paper. It looked like we were making a lot of money, but if we actually sold everything down, we were sort of barely breaking even. It was, an interesting strategy. Yeah. Now, some of the, business itself, right? A business doesn't really fit into the wealth pyramid, but if you wanted to put it in the wealth pyramid, it fits in active trading because you're trading time. Yeah. So the key here is you're doing the work, right? So you're actively trading either crypto, crypto stocks, whether you're doing futures or you're doing put calls, whatever it may be, but you're the one doing the cryptocurrencies. If you're trading gold, etc., you're the one who's pushing the actual buttons, right? And I really want you to understand that. So the next two, guys, after above active trading is what we call wholesale cash flow. Now, this is where the International Academy of Wealth has become experts in. We find, our definition of a wholesale cash flow is finding an opportunity that is above market returns, right? Above market returns. And we are targeting, sort of between 15 and 240% per annum. And You look at it anywhere. Look, sometimes guys, depending on the type of opportunity, you're sort of looking at for could be, sort of 3 months up to 5 years, 1 to 5 years, really. And there's some incredible opportunities out there, right? But here's the deal with these ones, right? You are looking to, you're sort of partnering with somebody, right? Partnering with someone who knows how to trade, and you do like a profit share. And this is where, copy trading is. You might even do some lending, right? You might lend someone some money to do a development, as an example, right? A property development, which is in the wholesale asset. But if you're the lender, right, and you're making a 15, 20% per annum return, then it fits in the wholesale cash flow. Yeah. But there's copy trading, social trading, signals. Well, signals that you'd be doing the active trading, but it's really around that copy trading, right? And could be copy trading crypto, copy trading shares, copy trading, trading gold, trading silver, trading currencies, etc., etc. And these can be quite lucrative. Yeah, but you want to make sure that you have exit strategies in this one. You're trying to protect your capital as fast as possible and go from there, right? And lastly is the top one, which is what we call ESI, right? Or early stage investing or early stage income, depending on what we're chasing there, right? Sort of like a subset, yeah? Now you're looking at anywhere from sort of aiming sort of 50% up to 5,000% per annum. And in the traditional markets, right, you're looking at sort of a 3 to 10 year return. But in the cryptocurrency, sometimes it's like sort of 3 months to, to 10 months, or 3 weeks to 10 weeks sort of scenario. And the types of opportunities that sit up there are sort of the IPOs, so initial public offerings. So this is where you invest in companies before they go into the stock market. ICOs, initial coin offerings, IEOs, initial exchange offerings, IDOs, initial decentralized exchange offerings, IGOs, which are initial game offerings, right? And most of all the other cryptocurrencies that are out there. So that's what we call early stage investing. And again, you don't have to put a lot of money at the top to make a lot of money. Yeah. And so if you understand and if you drew that out, guys, you've got your six areas, or you got foundational assets, wholesale assets, focused asset sector, active trading, wholesale cash flow, early stage investing, right? And it's like shaped like a pyramid, right? Or a triangle, if you want to look at that like that, the wealth triangle, right? The wealth pyramid. And, the key is it's shaped like that for a reason. You don't have to put a lot of money at the top to make a lot of money, right? But the real key for you to successfully build out your own portfolios is to have a mix of assets and strategies, right? Strategies with staggered timelines, and more importantly, really understand how you allocate your capital. It's really key for you to get that, yeah? And when you go to build out your perfect portfolio, the two main data points you need is where you are and where you want to be, right? And so when you understand what it is you want to, what you need to become financially independent, right? Your FIN number, that's the key. Once you understand that, then we've got a target. Yeah, you cannot fire an arrow and call whatever it hits the target. It's a favorite saying of mine, right? You can't just turn around and, some people will also go, oh, I want to, I want to retire on 100 grand. Okay, cool. Okay, well, let's spend that, right? What does that look like? Because when you're doing nothing, it costs a lot of money to do nothing, right? And so you might go, oh yeah, well, I want to fly, to Europe once or twice a year. Okay, well, there's 40, 50 grand alone, right? So you're going to make sure. So what we do is we help you actually build out what your perfect life, right? When time and money is no issue, what's it going to cost to live life your way? Yeah. So guys, hopefully that was useful. Again, I'm trying to keep these informational, educational ones as around that 15-minute mark. If you did like it, as always, please subscribe to it. Make sure you get updated on the new ones. If you've got any comments or questions, just get down below and put a comment, and myself and my team will make sure that we see it, and we will reply to any questions that you have. And if you want any other resources from us, guys, please let us know, and we will get it to you as fast as possible. We're here to serve, and see you on another next episode. Bye for now.